How's it going, guys? Welcome back to another video. My name's Alex, and we're going to be going over three short squeeze stocks that you should have on your radar for next week and the following weeks as well. Because, short squeeze plays, they are going to sometimes take quite a bit to gain traction. Can't always time them perfectly, but the best time is always to get them early, especially when they're gaining traction. So we got three stocks here. The first one is going to be Clover Health Investments, ticker symbol CLOV, and it's had a really big run up end of the day on Friday, which is very nice to see that the stock is finally gaining traction. It's been pretty flat, slight decline ever since it had a really nice squeeze in early June, but overall, it's basically at all-time lows. It is a healthcare technology company, and their all-time lows is $6.31 with an all-time high of $28.85. So we're sitting pretty close to the all-time lows. So even though it's up 6% on the day, it still is a relatively cheap price stock, and if the retail investors get their hands behind the stock and start rallying it, we can see a lot of potential with a short squeeze, because this stock does have a high short interest. So next stock on our list is going to be SDC, Smile Direct Club. Very talked about stock on Wall Street Bets recently. A lot of people throwing millions of dollars into the stock, whether it be call options or just flat out buying shares of these stocks. Just like Clover Health, these two stocks are relatively cheap, so the best way to play them would just buy and hold shares. You could do call options, but overall, I do think buying and holding shares and just waiting for the squeeze to play out, and just averaging down would be the best strategy for playing these stocks, because we can't time it perfectly. And if SDC happens to drop even further, we definitely don't want to have a really high cost basis. So buy some shares now. If its stock drops, then consider buying some more. Just average your cost basis if it does drop. So SDC has a really good week, up 21% in the past week. All-time lows is $4.63 with an all-time high of $16 per share. So really a good dip buying opportunity, even though it's up 21% a week. As we mentioned with Clover Health, it's still at a relatively cheap price. All-time high is $16. So we're sitting about negative 60% from its all-time highs. So the way to play this, just buy and hold shares. This is a stock that I like to sell cash cured puts on. It is a great company in my opinion. It's proven itself time over time again. And selling cash puts, I've been doing this for a while. They have really good premiums on these options. So you could do something like a 5.5 expiring next week, and you're going to receive $7 of credit. Now you might be thinking, hey, that's not a lot of credit, but you sell 10 of these contracts, you're going to be collecting $70 on the week, and this is over a 1% return. We can actually calculate that real quick. It's going to be $7 divided by the collateral, which is at 550, 1.27% for 1 week, which is kind of what we're aiming for when selling cash cure puts. So that's what I've been doing. I've been selling cash cure puts on the stock, and it's still a cheap stock, so I don't mind getting assigned shares, because then you could go ahead and write around sell covered calls. And we will be making a separate video on the wheel strategy and how to sell cash cure puts and covered calls in a later video if you guys request it. So comment down below if you want that. So SDC, another short squeeze play. And the last stock we have is going to, of course, be AMC. How could we ever forget AMC? I love playing AMC. I'm holding a few hundred shares of AMC, but my strategy with this is different, because this is a long time hold. This squeeze is going to take quite a while for it to play out, but once it does play out, it means that AMC is going to go to the moon. So that's what we're hoping for. But along the way, even though it's kind of shaky, within the past few weeks and months. My strategy is selling both covered calls as well as cash secured puts, just making a lot of weekly and monthly income from the call side as well as the put side, and just waiting for the squeeze to happen. But until then, I'm collecting tons and tons of premium, and I've collected enough premium to basically lower my cost basis, from around $45 per share all the way down to $15 per share, after I did all the calculations. So really nice strategy there, and I love selling options on AMC. As we can see, we have some options opened right here. For next week, I have a $33 cash good put as well as a $45 covered call. So we're making money both on the call side as well as the put side. And I've been doing this week over week, and I've been collecting a lot of premium on AMC. But overall, AMC, really nice short squeeze play. And even though it's down maybe half from where it was at its all-time highs in June, which was $72 per share, um, the apes are still winning on the stock because remember this, they had their short positions when the stock was a few bucks and sitting at $37. The shorts aren't really happy, so they're still waiting for the stock to come all the way back down to penny stock status. But a lot of retail investors are definitely holding the stock, and it's just an ongoing war basically. So that's what's happening with AMC. It's a long-term play. But overall, three short squeeze stocks that you should keep on your radar. A lot of them have potential. These two are going to be shorter term squeeze plays, with AMC being a more longer term play. So that's about it for this video. If it helped you in a way, please leave a like, comment down below what your thoughts are, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.